What is going on, my good old friends of YouTube? It is your boy Stas here. So listen up. We have a jam-packed week coming up this week in the stock market. We have a lot of companies set to report earnings, and no, not many big tech names. We already saw all of them report: Apple, Amazon, Google, Microsoft, Netflix. Actually, did Netflix report? Let me double check. They did, right? Am I losing my freaking mind right now, guys? I believe they already reported. Yeah, they did a while ago, about a week and a half, 2 weeks ago. But yeah, we have a lot of companies for this week coming up, like Disney, Uber. We have companies like Roblox, Celsius. We're going to break all of these down in this video. So if y'all find value, smash that like button, make sure to subscribe, and don't forget to get your free stocks from Moomoo, guys. You can get a free share of SoFi stock plus 5 more stocks, each up to $2,000 with just a $100 deposit, and you can actually get more stocks with more money deposited. We'll talk more about that later, guys. Use that link down below, or simply go to StasSurfS.com/Moomoo, get your stocks. And with that being said, guys, cheers. Let's dive right into the video. So I don't want to waste too much time with the markets in this video, but just to quickly take a glance at the indexes here, the S&P, the NASDAQ, they've been doing pretty well over the past couple of days. As I'm sure you guys know at this point, we've had SPY go from around, let's see, 410-ish back on the 30th of October. Now, mind you, it's only the 5th of November. So in the past couple of days, we've had SPY go from 410 all the way up now to 435. We're talking about a 6% move in pretty much a week here, guys. 6% move in a week, which is nuts. And triple Q in that same time period went from, let's see here, guys. Let me zoom in a little bit. We'll see. We went from around 342 all the way to now 368, a 7.5%, almost 7.5% move in just about a week, which is unbelievable. And now, let me tell you this. Let me mention this, which I've talked about this before, but I'll say it again. We are at a major level of resistance now on triple Q and on SPY. You guessed it, at the top of the channel here, which is on the 4-hour chart. You guys can see we've been trading in this downwards channel for pretty much 4 months, 3.5, 4 months at this point. So if we're able to successfully break out of here, if triple Q could break, let's say, 370, 375, if SPY could break above, let's say around, let me pull it up and see here, guys, we start breaking above 435, 440. All right, maybe at that point we do get a full-on breakout. More upside could be coming. Maybe we start going to the highs from the summer, but as of now, we're not getting that quite yet. We're not seeing the full-on breakout quite yet. So keep that in mind, guys. Don't get too excited yet. This could potentially be, potentially is the key word there, a fake out rally. Time will tell, guys. Time will tell. But as of now, that is a very big possibility. So that's SPY, triple Q, quick little rundown there. And let's just dive into these names now, guys. These stocks, actually, one of them's a REIT, a real estate investment trust. We'll talk about that in a couple of minutes here. But first, the first one that I'm looking at is Uber, ticker symbol UBER. And this is one that's slowly starting to break out. You guys can see we're above the moving averages on the 4-hour chart. We're actually pushing past the highs here from the end of September, mid-October, where we double topped at about 47. We actually blew past that last week, and we closed above it, which is great. And if I draw out the channel here, let me show you guys this. We're actually slowly starting to pop out of this channel, which is great. And now it looks like we're testing the highs from, it looks like here, the middle of September. That's going to be the next main resistance, which if that's able to break, who knows, maybe after earnings. I believe they're on Tuesday. Let me double check here, guys. They're on the 7th in the morning. Yep, that's Tuesday. If we're able to push through, let's say 49, past $50 in general, that's going to be a clear-cut breakout. I mean, it's already breaking out, but for this thing to really break out and take out the highs from a couple of months ago, being about $52, it's going to have to break out above the high from September, which it kind of looks like it's heading in that direction, guys. Does it not? I mean, call me crazy, but that's kind of what I'm seeing right now on the 4-hour chart. And mind you, it's pretty overbought. It's actually screaming red on the RSI down here. It's at, RSI is at 83. So I don't know. If earnings disappoint, we might get a bit of a sell-off there, but time will tell. EPS is looking to come in at 11 cents, so actually a profitable quarter here versus the loss of 61 cents from last year. So that's actually really good there for Uber, and their revenues looking to come in at $8.99 billion on average. Again, these are estimates here. Who knows what the number is actually going to be versus the $8.12 billion from last year. That's going to be up around 11% year over year. Not too bad. So I'm going to set my alert here at 49.50. Let me do it there. 49.50 mark is at or above, and I'm fully aware that we are a bit overbought. We are heading to a big resistance here into earnings, and I want to make you guys fully aware of that as well. Realize that if these earnings disappoint, we could easily erase this gain that we've seen. Let me set the alert. For some reason, it's not letting me do it. What's going on, Thinkorswim? Either way, man, it doesn't matter. I'm still going to watch the stock. So $48 is where it's at now pretty much. And to give you guys some perspective, it was at $40 just about a week and a half ago. So this thing's up 20% in the span of about a week and a half. So keep that in mind. Be a little bit cautious here with Uber. At least that's what I'm personally doing. Now, Datadog is another one that I'm watching, DDOG, which has not been doing well recently. It hit $118 back in the end of July. Now it's at about $82. It's down, let's see, 30%. So it's well in a bear market. It's down well over 20%, guys, which is what a bear market is. Whenever a stock or an index, ETF, whatever, goes down 20%, it's a bear market, technically speaking, right? That's how it works. And you guys can see a clear cut, you guessed it, Head and Shoulders, which you guys can see it here on the 4-hour chart if it wants to let me do this. Boom, left shoulder right there, got the head right here, got the right shoulder right here. So you guys can see that clear as day. It's playing out. And we actually took out the lows now from the last time this company reported earnings, which is not the best sign. If you guys remember back in August, this was at about $115 a share. Company reported earnings, and it went all the way down to about $83-ish per share, like that. Boom, snap of a finger, dropped 27%. And now you guys can see we're under that point pretty much. We closed under $80 last week, or under $83 last week, and we actually got under $80 at one point. We hit $77 last week. So Datadog is clearly not heading in the right direction for the bulls, at least. Yes, the bears are having fun with this thing right now, but the bulls not looking so good. And we have earnings coming up, I believe, on Wednesday or Thursday. Actually, no, Tuesday morning, same day as Uber. Datadog set to report in the morning. So watch out for this Head and Shoulders. Also, keep your eyes out on this descending triangle, although it's kind of playing out already. But I don't know. Keep it in your mind either way. You guys see that descending triangle right there? There could be more downside here, and it's a tough time. With earnings coming up, man, anything is possible. So I'm putting these on your radar, these stocks. I'm drawing out some key levels, telling you guys different scenarios, and do with it what you will or what you want to do. I'm not telling you to buy, sell, do anything. All I'm doing is putting these stocks on your watch list, on your radar, right? So DDOG, Uber. We also have a REIT, like I mentioned a couple of minutes ago, which is Realty Income. This has been the talk of the town, especially on Twitter or X, whatever you want to call it. Everybody's talking about Realty Income. Oh, I'm buying Realty Income, loading the boat, this, that, the third. And personally, guys, I've owned this REIT in the past. I don't own it right now. You know, I've sold it. It was a while ago. I think about 2 years ago. I sold it a year and a half ago. Either way, I've owned it for quite some time, or I did own it quite some time. Sold out of it. But if you didn't know, this is the quote-unquote monthly dividend REIT. Is that what the slogan is, the tag phrase or tagline, whatever you want to call it? Because you guessed it, it pays monthly. And this, since 1993, I believe, since inception, it has beat the S&P 500, believe it or not. I think its return is like 15%. I'm not sure if that's with dividends included annually. I'm assuming it is. So 15% is pretty good for my memory. It's on their website. You guys can go see it for yourselves. But they have not been doing well. This price, the REIT's price, has been getting destroyed. The share price. I mean, it was at $75 per share about a year and a half ago. Back in when was that? April of 2022, and before that it was even higher, right? Wasn't it at $90 at one point? $85. All right, I'm close enough, guys. $85 back in February of 2020. So this thing is down a good chunk, about $35 per share from all-time highs. And we can see overall the uptrend still holding on the max chart, which is good. But let's see now if we do get that pop in the $45, $50 range, which it looks like we kind of are, at least as of now. We're starting to see a bit of a relief rally on Realty Income. By no means is it fully breaking out, but we are starting to get that little V-shape relief rally, which is nice here on the 4-hour time frame. So they're looking to do revenue of $1 billion versus $825 million from last year, up 21% year over year. And their EPS is 32 cents projected, which came in right in line, or it's projected to come in right in line with what they did last year, 32 cents. So keep your eyes on it. Will the earnings be enough to get it out of this hole? Probably not, in my opinion. There might be some more downside or some sideways trading. I don't know. But in due time, I do believe Realty Income will bounce back. I don't think it's going anywhere. I don't think it's going to go bankrupt. I mean, they still have, last I checked, I think 98% occupancy rate. I mean, or you know what I'm trying to say. I believe it's occupancy rate, right? They have 98% of their properties full at this point. It's one of those that triple net lease, I don't see it going anywhere really, unless we get a massive disruption. I don't know. Who knows at the end of the day? But this could be, keyword is could, end up being a buying opportunity, in my opinion. Now, the next one we have here is CELH, which you guys probably know. This is Celsius, that energy drink or energy drink company, whatever you want to call them. That's pretty much sprouted up here over the past year or 2 years. And this has been a hype stock, if you will, right? It's one of those that has been going up like crazy. It's probably overvalued. I mean, it's definitely overvalued. It's one of those that, again, it went public. Well, actually, I was about to say it went public recently, but this thing has been public for about 13 years now by the looks of it, but it really started to get popular about a year, 2 years ago. The stock started to spike up about 3 years ago, a little over 3 years ago. So this is one that I'm watching for a trade, not really for an investment, but kind of a momentum trade. And you guys can see on Friday, it went up 7.7%. Looks like we're starting to test the moving averages here. We're well above the 50. We're breaking above the 180 here. So it looks like, man, CELH is on the up and up. We have earnings coming up on, I think, Tuesday morning. Let's double check that. Yeah, Tuesday morning on the 7th, and they're looking to do EPS of 46 cents versus the loss of $2.46 from last year. Talk about a nice recovery there in EPS, and revenue $348 million. Are you guys ready for this? Versus the $161 million from last year. That's up 115% year over year. Unfreaking real, guys. So yeah, CELH is one that for sure is overvalued in my opinion, but momentum could easily take it back over $200. In my opinion, I think if we get good earnings, good guidance, we could get that spike, that continuation here in CELH. And before we talk about the last three stocks that I want to talk about today, guys, don't forget to get your free stocks from Moomoo, the sponsor of today's video. Feel free to use that link down below, or just simply go to stocksurfest.com/Moomoo. Once you open up your account and fund it with your initial $100 deposit, you get 5 stocks right off the bat, each of which could be valued up to $2,000, and you get a free share of SoFi stock on top of those 5 stocks, which that part of the promo is a limited time, guys. And if you want to, up the ante a little bit and you want some more stocks, fund your account at least $1,000. You get 10 more stocks, totaling 16 stocks, again, all of which could be valued up to $2,000. So what are you waiting for, guys? Use that link down below, or just simply go to stocksurfest.com/Moomoo, get your stocks. And with that being said, cheers. Let's talk about the last 3 stocks here, the last 3 companies that I'm looking at for this week, and you probably guessed it, Disney is one of them, or maybe not. We're going to talk about it either way, guys, because this is one that I personally own, and I've been buying it in the 90 to 85 range. Not much recently, but about a month or two ago, I was buying in this range right here. Either way, it's still in the $85 range. It actually got down to $78 about a month ago. And this stock, if you guys didn't realize, I'm going to tell you right now, is pretty much at the same level it was at about a decade ago, which is nuts. I mean, look, yeah, literally about a decade ago. March 2014, January 2014, it was at $80 a share, man, and now it's at $85, and we're about to go into 2024, which is just in freaking sanity. And who knows if it'll bounce back to all-time highs. I suspect it will at some point in the longer-term future. But as of now, it has not been doing well, and there's no sign of a reversal in sight. So they're looking to do EPS of 68 cents versus the 30 cents from last year. So that's actually going to be growing nicely, EPS year over year. And revenue is pretty much going to be the same as last year. $20.13 billion is the expectation versus the $20.15 billion from last year. So it will be down a little bit, but pretty much break even year over year. I believe they're on Wednesday after the bell. Let me double check though. Yes, on Wednesday, right? Why is this not showing? Probably the 8th. Yeah, the 8th of November, which is on Wednesday after the bell, we're going to be getting Disney's earnings. So we can see they're clearly still, again, like I said, downtrending, no signs of a reversal. And I'm going to just draw out this channel just to get a visual on it and watch to see if it does slowly start to break out of the channel, which as of now, no signs of it doing that quite yet. The next one is Roblox. RBLX is the ticker. This is slowly actually starting to reverse. We actually have a golden cross here, and you can see we've gone up from $24 back in the end of September. Now we're at $34, up a good $10 or about 40%. Very big move there for Roblox. They're set to report earnings, I believe, on the 8th in the morning, which is Wednesday morning. And if you guys take a look at this line that I drew last time we covered Roblox, let me extend it to the right. You guys can see we're actually breaking above a very critical point of resistance right now, which is great for the bulls. You can see we actually held support in February at about, let's see, $34. We also held that in May, $34, and we broke through it, which then made it resistance, right? And now we're starting to break back over 34, which is very good for the bulls. You guys can see now we're pretty much trading back in this range from, let's say, $34 as support to about 42 as resistance. 46 is another level of resistance, you guys can see. So we're trading in this window right here. Boom. You guys see that. And let's see if it continues in there. In this window after earnings come out, we shall see, guys. They're looking to do EPS of negative 51 cents versus the loss of 50 cents from last year. So pretty much right in line with last year's EPS number. And revenue is going to be growing 18% on average here, projected $20.13 billion, or actually no, 824 or 29 million. Excuse me, I read the wrong line here, guys. 829 million versus, what was it last year? 700 million roughly. Last year, that's going to be up 18% year over year. So keep your eyes on Roblox. And last but not least, guys, is WBD, also known as Warner Brothers Discovery. This is really not reversing by any means. Yes, it is up around $2.50 in the past couple of days, which is nice, 21%, but still it's in a downtrend, clear as frickin' day here, guys. Let me draw it out for you guys. You can see downtrend is intact. Boom. So we'll see if these earnings shift the trajectory of the stock. I doubt it, at least in the short term. Who knows, though? Maybe I could be wrong. But they're looking to do EPS of, let's see, negative 6 cents versus the negative 95 cents from last year. So that's actually doing, it's improving a lot year over year. But revenue is going to be down about 3% year over year, $10.04 billion versus the $10.36 billion from last year. So they're going to be declining a bit in revenue, and they're projected to do, or to report earnings on the 8th, Wednesday in the morning. So keep your eyes on WBD, guys. Roblox, Disney, Celsius, Datadog, Uber, and Realty Income, all the different ones that we talked about today. So make sure you guys add them to your watch list. I'm not telling you to buy, not telling you to do anything. I'm not a financial advisor. All I'm doing is bringing these to your attention. So what do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe. Don't forget to follow me on X as well, at Stas Talk Stocks, and I'll see you later.